So in this video, we are going to talk about how the market moves, and we're going to talk about trend change. So the market moves in three ways, right? Up, down, sideways. So we have an uptrend right here to the left, the market's going up. We have a downtrend right here to the right, the market's going down, and we have the sideways motion right here. So this is where the market's not really doing anything, and for the most part, you really don't want to trade this unless you're trading the extremes, which is the highs and the lows. All right, so let's go to the chart and show you guys some examples. And before we go to the chart, now every time the market goes up and it goes down like this, we call this a pullback. So a lot of times these pullbacks are not this clean, so you will have a pullback that looks like this. Let me show you that real quick. Down, up, down, up, down, okay, and back up. And this is where we can draw our trend lines, okay, just in case we want to get in. So right here, connect this right here, and I'm gonna show you guys later how to do that, but we can connect the trend line right here, and then when it breaks the trend line, we can get in. So let's go to the chart real quick. Now this is an uptrend, guys, so let me show you guys real quick. So this is the market going up. So we have the market going up, down, up, down, up, down, up, down, up, down, up, down. So we call these, guys, we call these, when the market is going up right here, this is a higher high, okay? And if you look at this pullback right here, okay, this pullback right here is called a higher low, because this low is higher than this low, okay? And this high right here is higher than this high. So right here, higher, higher, okay? And guess what? This is a higher low, because this low is higher than this low, okay? So that is a simple definition of an uptrend, and we do have the market going, you know, in that zigzag pattern, and once it breaks that, you can take a trade to the upside. So let's go to the downtrend. Okay, so here's the downtrend. It's the same thing, like the market's going up, but it's the opposite, okay? It's going down. So we have the market going down, up, down, up, down, up, down, up, down, up, down, up, down. Okay, so another thing is, do you see these pivots right here, the point, okay, where the market basically went up and then now it started to go down? We call these swing highs, okay? And right here, this point where the market start to stop and go right back up, we call these swing lows, okay? So this is a swing high, and this is a swing low. So we have the market going down, and also we have this zigzag pattern right here. Again, once it breaks that, you can actually take a trade. So we have another one right here, okay? Nice little zigzag. We call these trend line breaks right here. So when the market's going down, okay, we have lower lows. So this low is lower than this low, okay? And this low right here is lower than this low. So we call these lower lows, okay? Now, when it comes to these swing highs right here, we call these lower highs, because this high right here is lower than this high, okay? And this high right here is lower than this high. So we call these lower highs, and this is a lower low, okay? So that's a simple definition of a trend, and that's how you identify a trend. Now I'm gonna go over a quick way you can identify a trend, you know, just by looking at the market. So let's go right now. Now another way you can identify a trend is by putting a moving average on your chart. So what is a moving average? The moving average basically smooths out price, and it represents the average price over whatever number you pick. So right now I have the 20 moving average, the simple moving average, and it represents the average price over the last 20 bars. So let's look at this 20 moving average right here, this nice blue line right here, guys, And basically, this is how you can identify the trend real quick, because if price, which is a candlestick, if price is below this moving average, that means for the most part we are in a downtrend. And when price breaks this moving average and it start to go up, okay, now we are in an uptrend. And this is how you can actually take advantage of short-term moves. You can, sell the market, buy the market. This is what I actually used when I was a beginner. It helped me a lot. So the 20 moving average and the 50 moving average is very good when you are new and you're just trying to identify the trend and look at the trend. Another thing you could do is you can use trend lines to identify the trend, but we're not gonna do that in this video. Okay, you can just use a simple moving average, okay, to look at the market and say, you know what, I'm looking at this market right here. The candlesticks is below the moving average, is trending down. Most likely we are in a downtrend. I'm gonna look only for shorts. So if the market's going down, you only want to look for shorts. And guess what, when the market breaks up with a lot of volume and it starts to pull back and it starts to go up again, you only want to look for longs. Okay, so that's the concept. Okay, and that's how you want to treat the market. Again, right here, the market breaks the moving average and you only want to look for shorts. So that's the simple way to just look at the market, look at how the market is changing the trend, because a lot of new traders, you get stuck on, is the market trending down, is it trending up, Okay, another way to look at the market to see if the trend is going to change, you look for the market to take out a swing low or a swing high. So here's a good example. The market is trending up right here, okay, and then right here we take out this swing low, okay, and notice how it creates this low right here, it comes back and the market takes out this low right here. So we are making lower lows right here, right? So to me, that's a sign where it's a possibility the market could reverse, okay? It might not be a full-out reversal, but it might be a temporary reversal. So what I see here gives me more confirmation is we have support turning into what? Resistance, okay? And then the market came back to that resistance and then sold off. So the market is going back down and we try to make a new low, but we can't, and it breaks this high right here, and it tried to go up, but it came back down. So to me, I'm waiting, and then it comes back down and it breaks this high. Now to me, the way I'm looking at this is I'm not really looking to look for any type of long just because it broke this high. I still want to draw my trend line, and we're going to talk about that later on. But if you draw the trend line and it breaks this high right here, to me, that high is still not very important, because we can actually find some type of resistance right here. Now, once it breaks this high right here and it breaks the trend line too, that's when I say, okay, there's a strong possibility we can actually reverse, okay? Now, notice how we're going up right here, and then we actually break this low right here, okay? And then we break this low right here, and then the market goes down. So when the market breaks a swing high and a swing low and then it breaks a trend line, okay, that's another way to look at the market and say, okay, the market might be, changing direction and, reversing, okay? Now, with this one right here, when it breaks this trend line, I really like this swing low right here, okay, because it really broke this trend line right here, but we could actually have some type of support right here. But notice how it fell, okay, we try to have support, but it broke down. That's when I'm saying, okay, I'm very interested in this trade, because most likely the market doesn't want to go back up. All right, so this is the sideways market. So we had the market pretty much not going anywhere, right? The market's going up, down, up, down, up, down. It's not making a strong trend to the upside or downside, right? It's in this range, right? So the way I attack these markets is I love to trade the extremes, which is the high. So when it breaks these levels right here, this high right here, I like to get in. Same thing right here with these lows right here. When it breaks that low, I like to get in, because those are key areas where you want to see either buyers or sellers come in. Okay, so so that's a ranging market, the sideways market. And for the most part, if you're new and you see something like this and you don't want to trade it, guess what? Don't trade it, because a lot of new traders, they get caught up with this, and sometimes they don't trade it well. So you can just only stick to trending markets for right now, and just stay away from these markets. But the only way to trade these markets is to trade the extremes, wait for it to break the high, and then just, short it to the downside, or wait for it to break the low and go to the upside. All right, so let's go to the next video.